the Fed is stepping in to save the market. There's been something that was announced over the last few days, which really fixes one of the massive problems from the banking collapse that we're seeing in the U.S. with Signature Bank and with Silicon Valley Bank. We also have an update on Credit Suisse, and we have news of a cryptocurrency that's having some massive problems. Now, please hit the subscribe button underneath the video. Turn on the bell notification so you know right when I post a video. I mean, it's 5:30 a.m. my time, but here I am making a video because there is some stuff that is pretty time sensitive that you should know as soon as you wake up. So again, hit that subscribe button. If you want to join the Patreon so you know right when I make a trade, which doesn't happen too often, but when I buy and sell for longer term, you can check out that link underneath the video as well. Crypto, it's down a little bit over the last 24 hours. There's some news about a specific crypto that doesn't look great, but first of all, let's talk about why the market is looking like it does. Yesterday we had a red day for the general market, but it was kind of odd because we actually saw the expectations of a rate hike go down. So now the market is pricing in 25 basis points, which I think is pretty likely for next week. This whole time I thought that the Fed would probably raise by 25 basis points. They've been saying that they're going to continue to raise, but I don't think they're going to jack up to 50. There is a 35% chance now being priced into the market that we get zero rate hike, but I think we should take the Fed at their word because they have been continuously raising. Now, I do want to cover the fact that Credit Suisse is now able to borrow $54 billion from Swiss National Bank to shore up liquidity. Right, there are a lot of questions over their liquidity yesterday. Their largest investor would not invest any more into them. And I covered it a lot yesterday, so I don't want to cover it too much. But you can see this news is doing really well for the company. It's up 25% in the pre-market on this kind of bailout announcement. Now, yesterday was odd. Like I said, the markets were down, but the chance of a Fed rate hike also went down. The market was pricing in less of a chance because of all the fallout from the banking collapse. Now, I explained in my video yesterday why that was. Basically, banks and large investors are now pricing in the fact that smaller banks are less likely to lend because of everything that's happening with the fallout. They're thinking basically that they're going to tighten and they're not going to lend as much. And the small banks do account for a large amount of lending here in the U.S. And that would basically cut GDP estimates. They say that this would be equivalent, since they think the tightening is going to cut GDP, to basically the Fed raising another 25 to 50 basis points. So they're basically pricing in the fact that over the last week, the Fed has basically had to raise rates, essentially. It has a similar effect on the economy. And that's why it pretty much offsets the fact that we're not expecting the terminal rate to go as high. It makes sense, right? The reason that we like the Fed to stop raising rates is because that means GDP will grow and companies will continue to grow as well. So if there's something else that causes GDP to fall down, it has a similar effect. But now JP Morgan is saying that the Fed may be stepping in, or actually is stepping in. JP Morgan says Fed loans will provide $2 trillion of liquidity. Fed's funding program is set to reverse the impact of all this tightening. So what is this exactly? Well, the Federal Reserve announced an emergency loan program which may inject as much as $2 trillion of funds into the U.S. banking system to ease the liquidity crunch. The usage of the Fed's bank term funding program is likely to be big. They say that it won't be necessarily used by large banks as much as small banks, but the U.S. authorities set this program up earlier this month, and I think it was literally just in the last week. I think it was March 12th. Following a collapse of 3 lenders with the aim of preventing a fire sale of sovereign debt to obtain funding. Treasury 2-year yields have tumbled more than 60 basis points this week amid speculation the Fed will skip an interest rate hike as it seeks to stabilize the banking sector. While there are still $3 trillion of reserves in the U.S. banking system, a significant portion of that is held by the largest banks, said JP Morgan. Tighter liquidity has been caused both by the Fed's quantitative tightening and also by the rate hikes that have induced a shift of money to money market funds from bank deposits, they said. The bank term funding program should be able to inject enough reserves into the banking system to reduce reserve scarcity and reverse the tightening that has taken place over the past year, the JP Morgan strategist wrote. The Fed will report on the use of this program on an aggregate basis every single week. So if you have not already determined this, if you have not already figured this out, there's going to be financial loosening, right? There's going to be more liquidity in the system because of all this breaking down in the banking system. That's great for crypto. Bitcoin does really well when there's loosening monetary policy or when there's more liquidity flowing into the system, which is what the U.S. has to do. They have to pump more money into the system. They have to inflate the U.S. dollar, or they need inflation. They need to deflate the value of the U.S. dollar because they have too much debt. They have too big a budget. They need to continuously do this because they can't meet their obligations. And when they start to raise rates for too long, the market collapses, right? The bond market is basically pricing in. There's no chance that they can continue to raise rates up another 1.5% without breaking something. That's why we've seen treasuries fall down. People are buying them because they don't think that they're going to get a better offer later this year. And it's fallen very quickly. We haven't seen drops like this in treasuries since the 80s. So this is all pretty scary, but the fact is, if the Fed can come in and provide liquidity, that's going to be great for risk-on assets, especially if we see CPI and PPI and PCE continue to come down, the Fed's a little bit more dovish. This could be a really good scenario. Now, moving from that to a specific crypto, there are certain cryptos I don't talk about too much on the channel for a couple different reasons. Some I just don't think they're going to do well over time. Some I just don't like to cover too much because I think that there are better options. But one that has been doing really well over the last few years that I don't cover much because it is a meme crypto is Shiba Inu. Now, Shiba Inu is down more than anything in the top 15 with the exception of XRP over the last week. And this is at the same time that they had a massive layer 2 blockchain release, Shibarium. A lot of people have been waiting for this. I've been kind of keeping up with it. It looks like it was pushed back several times. And now there's a lot of drama about it. So this just came out. A lot of people looking at this. Basically, the Shibarium code was apparently ripped from another cryptocurrency. So this is all happening in the Shibarium or in the Shiba Inu Discord. This person says, so a Genesis file creates a blockchain. The Genesis file has many attributes, but the big one is chain ID. The ID is completely unique in the MetaMask, and the other wallet applications use it to determine the network to send transactions to. Chain ID is the simplest thing any blockchain dev looks for first when deploying a blockchain, as using an ID that already exists is just incompetent, as your chain wouldn't work properly and everyone trying to interact with the chain would instead interact with the other chain unless you somehow ask the owner of the other chain to turn their nodes off so that you could spin up a node with a copied Genesis file. So why is it that it looks like Shibarium Testnet has taken Renia Testnet Genesis file, changed the name from Renia, but forgot to change the chain ID? Renia has been live and owned that chain ID since February and was planned in December. The only way the chain ID could have been taken from Renia Testnet is that the Renia net dev is telling the truth. Now, there are a couple screenshots going through this. The devs do refute this, saying that it wasn't stolen, but it's pretty unclear. I'll be honest, I'm not a developer, so I can't make sense of a lot of this, but it does smell a little bit fishy. And this is coming from the community as well. Now, BitBoy Crypto has also said that he doesn't like basically what's going on here and that he's going to reveal who Shytoshi is, which is the main developer behind SHIB. So this is going to be really interesting to watch. I mean, like I said, I'm not the biggest fan of Shiba Inu just because I think there are better places to put your money. I think a hard asset like Bitcoin is much better, or a layer 1 like Ethereum that has a lot of network effects and has a decreasing supply is a much better use of money than trying to put your money in Shiba Inu. It's really hard to tell what kind of meme coins are going to be around from one cycle to the next too, because over time, so many different cryptos have come in and out of the top 10, top 20. So I wouldn't be betting on anything like this. Hopefully, though, they can figure it out, because I know a lot of people have money in Shiba Inu. Hopefully, everything works itself out for the community's sake. Let me know your thoughts on this, though. Who do you think Satoshi is? There's some people that say that it is Elon Musk. Some people think that Sam Bankman-Fried, because apparently he was working with the project early on, but supposedly he's just someone that worked with Satoshi. So we'll have to see what comes out of this. Thank you so much for watching. Let me know your thoughts about the liquidity crunch as well. Do you think this is great for cryptocurrency? And again, I'm not doing anything different than I was before. I'm just going to continue to invest in the same way. If there's a dramatic shift in the market, then maybe I'll throw in a lump sum, or if we see another dip, I'll definitely be biting up more Bitcoin as well. Thank you so much for watching. I appreciate it, and I will see you in the next video. Bye.